I'm Popeye the cockless man. I'm Popeye the cockless man. I don't have a cock, but I've got massive forearms. Hello, boys and girls. I'm going to be having a look at Aussie dollar today. And why? Well, why not?
Wait. Matron, take them away.
And a warm welcome to one and all. This is your first time here. I'm the big fella, Scruffy Trader. What I'm trying to do is put trading in the real world. Maybe show you a trick or two along the way. So if that sounds good, do take a second to hit that subscribe button if you find value. And if you do, crack the like, turn on the bell icon, all that sort of good stuff. And we'll crack on. So what am I looking at? Why the Aussie dollar? Well, why not? It's kind of a good market for today. And what I'm going to do is I'm going to take you through the trade, kind of give you a little bit of reasoning behind it. But in these videos, I also often go on a tangent, but I give you some advice about how trading's done in the real world, because this is my job. This is what I do for a living. It's my sole income. And if I don't get it right, well, I don't get paid. And that's the key element with trading, getting paid. You know, sometimes the desire to trade outweighs the reason. My reason is it's my job. So I have to do a set of tasks and that's it. And then there's others that just, they want to press the button. They want to be in a trade all the time. Press the button, press the button, press the button. Well, that's not trading, that's gambling. There is a distinct difference. If you rock up at your job and your boss said, right, I want you to sit there for 3 hours, plan out how you're going to execute the task, and then I want you to complete the task at 1 o'clock, you'd be quite happy. But in the trading world, you sit down and you immediately want to do the task. No planning. Big difference. Let's jump on the charts and let's have a look. So I've already got it marked up the way I want to see it. Now, in the Discord group that I look after here, I like to tell the guys what I'm doing, and I do it in various ways. There's this one here where I'll put the bias in. So for 9 o'clock, and it's currently coming up to 9 now, I'm only going to be looking to buy this thing. And why? Because it comes from the strength sheet. And the strength sheet was put in earlier on this morning at 7 o'clock. The tasks, the preparation, if you like. And what it was telling me was I've got a market pick and I've got the majors. Now, the majors always take precedence. So if something comes up in here, I'm going to look at it. And what I'm looking at here is it's the Aussie US. Now, if I look into this, the Aussie US is there. All right. So that captures my imagination. We've also got USJPY, but I don't particularly like trading that. So I'm picking the Aussie dollar. All right. Call it personal choice because I like to trade a single asset at a time. And when I'm looking at it, I can see the Aussie's relatively strong. The US is weak. And when I move over here, I can see the Aussie's gained ground and that's lost ground. So what it's telling me is there's movement. And that's all I'm interested in, movement. So I've made a decision as to which of the two products that I'm going to look at. And it's the Aussie, like I say, personal choice. So I do a quick analysis and I try and figure out what my direction is. Well, my direction is it's buy, but it's telling me to be careful because it is overstretched. And overstretched means I've looked at some oscillators and they're at the sort of outer edges of them. Now, it's not altogether a bad thing, but it just means be conservative with my target. Okay? And then what I do for them, as much as we have a chat and a sort of bit of merriment, we were discussing direction in this morning call here. I will also break the chart down and tell them exactly how I'm going to trade this now. So what you're seeing, they already know. And I think that's the fairest way. So what are we looking at? Well, if I just push this out to the hour for a second, we can see it's had a colossal drive up yesterday from the news event. Whoosh. It's come down, but it found a level and it bounced off it, shot up, went straight through a key level, and then came into this zone here. Now, I like to work in trading arenas from here to here. In other words, 2 trap points. This is a brick wall, that's a brick wall. And as long as it stays between these 2 points, I'm quite happy. Now, I've already put in entry exit points, which are these blue lines, and it's pushing down into it now. So take this onto a 15 so we can see. Well, it's pushing down into it. Okay. Nice move up with an upper target here. If I'm looking for 5-10 pips, just measure that out. That's my room. So we take it down into 5 minutes and we can see it's in a green zone. So that's reasonably good. It has relaxed a little bit down to here. And what I need is 10 pips. So from that green to that red, I have enough space. So the further down I get, the less work this chart has to do. So what are we looking at? Well, are we ready to pop? Not a million miles away, to be honest. So if we do a candle count, 1, 2, 3, 4, 5, kind of roughly about here. So just drop an order in. Just there. I'm going to set this for just an initial target of 10. So I'll leave that there. But the idea is maybe to follow the price down into this red zone. Okay. Now it is pushing down a little bit. I didn't want to place an order here in case it kept on going. I want to place the order above the candle so it picks the order up and then keeps on going. That's the general gist. Doesn't always happen. Sometimes comes up, pings, and then goes back down again. Just one of them things. But it's something I prefer to do. However, I may put some pending orders here because that is a strong possibility of a bounce off. Okay, so that's roughly what I'm going to be doing. And it's really just from the hourly. And what you can see that it's pushed up. It came down aggressively, but why not? You know, you've got to have sellers. All of these sellers ran out of steam. Then the buyers started creeping back in. Massive accelerant off the news. Obviously the retracement. We've just clipped into the order now. There's the retracement of that news event, which happens quite regular. And now it's carrying back on what started down here. Simple. Let's see what we can do. So drop this back to 5 minutes. See that back. See it's just clipped in. Moving up. And we'll see if we can get our sort of target over the course of the next hour. Why not? Happy days. Right. Let's run this out. I'll stage into it down onto this red. And, well, see if we get some pennies. Catch you in a bit. Okay, guys, job's done. Why? Well, held my nerve, basically. And yeah, chopped around, but I had a solid target and a premise moving from this green zone into the red one, shot up, did its job, and it's paid me quite well. Nothing else running, no orders. That is it. Okay. Now I can't really be any fairer than the way I've done that. You know, it's a clean chart, broken down, and a basic premise start to finish. Now I just need to reset the clock, see what's going on, maybe move to the next product and the next product, and that's trading in a nutshell. Just being systematic and working your way through the process. Now my process for this was very, very simple. I had my key levels in place, which you could see. I could see the stall points, which were the red zones. Those were where the price would potentially stall. It also trapped the price between 2 points, giving me a clean trading arena. And as long as it stayed within that, the premise was correct, and the stop would have been just on the other side of it. Go down through the time frames, and I mean real high time frames, like your dailies, your 4 hours, your weeklies. Look at them all. Get an understanding of what the market is trying to achieve, funnel it down onto an hour, see what the hour is looking at, and if it all lines up for this current hour, then move further down to find an entry. Set of tasks, and then a completion. Very, very simple, guys. Very, very simple. So that was a quick one. Hope it helps. If you're stuck, I'm very easy found. You find all my contact details below, my WhatsApp number, that sort of thing. And I genuinely answer everybody's messages. Can't always give you the right answer, but I will talk to you, because I'm not like many of the others that will just ignore you. You know, I think that's terrible. You know, and if you're interested in trading and seeing it properly, do come along to the Scruffy Squad. We'll make you most welcome, and you'll see exactly what the makeup of that is. And if you're looking to stretch your pennies out, there's a couple of brokers in the description there. You can look at BlackBull. You can get into them for next to nothing. They've got 500 to 1 leverage, so it'll lift up your buying power. And if you want to spread your pennies even further, do look at the prop firm, which is 5%ers. There is a 5% discount link there as well. And you can look to enhance your skills with the backing of a big firm, because there's a lot of education there as well. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.